So this is US dollar Japanese yen analysis for Tuesday the 17th of October. Now let's just see what's happening with these markets here on the 16th. Prices have come into the area which we were interested in around 1160 and 1180. 1180 on the weekly chart. Let's just have a look. On the weekly chart, 1180, we do have, it seems to have gone up a bit. On the weekly chart, we did have the 200 period moving average sitting at 1180. It's currently up to 1184, but that's where the weekly moving average was on the so 1180 was where we had our weekly moving average, and 1160 we've got that horizontal support from before. And as prices have come down in there, we have seen buyers step into the market. We did have signs over here on the 13th, but as prices have come into it on the 16th, a couple of retests, prices have not managed to retrace all the way down to 1160, and buyers have stepped into the market to drive prices all the way back up to the 112.15 level, which was a weekly pivot from a couple of weeks ago. So where do I expect prices to go? Now, if we do hold this 12.15, which we appear to be, these smaller candles indicative of a retracement rather than a reversal. If we do, but we have to be cautious as these candles did form near the end of the US session, so we have to see how prices behave during the as this is a yen pair, it is going to be affected by the Asian session also. So we'll see how price develop during the Asian session. Well, we won't see, but how price develop during the Asian session will be interesting. But due to the size of these candles, let's interpret what we can see here. Now, if we do continue to get small candles, we might see a retracement all the way back down to, I probably wouldn't say the 50 period moving average over here. Let's just say 112. 112. So about within 16 points, you'd say it's reasonable to expect that much of a pullback before a continuation to the upside. If we don't see that much retracement in the trend, we could potentially see the bull flag form and a continuation pattern to the upside from where it currently is at the moment. We do seem to be putting in a bullish candle, which is going to finish in the next 10 minutes or so, but we might just go into a consolidative range, going up and down before we head upwards. So if we do head upwards, we have to be aware of moving average here in black above the 1250 area, which we are interested in. Now, if prices do go up to 1250, I would expect to see a big reaction around there. So either a reversal or a bit of consolidation before a possible break. A couple of retests from underneath. And if we do break above 1252, we could likely see a retest from the other side before a continuation upwards. 112.76 would be the very short-term target, as it is so close to 1252, and above which we'll be looking at the 1344 level, ultimately the 1356 level. Now, if we do in fact break down from here, as this was just the initial buying pressure from the bulls in around 1180, 1160, we could see prices reverse all the way down to 1160 for a proper test, with prices actually breaching or actually touching 1160 before we might see a small bounce, possibly all the way back up to 1250, 15, or we might go all the way down to 1160, consolidate a bit, retrace a little bit before breaking down. If we break down from 1160, 1073 would be the next area of interest to the downside. I wouldn't expect prices to break either the 12. I wouldn't expect it to break above 113 or below 110.73 in the next day or so, so on the 17th. But those are the levels I'll be looking at, both to the upside and to the downside, depending on how prices develop. So let's just have a look at the higher time frames. Not much would have changed from having a look at them a couple of days ago. So if we go out to the monthly time frame, we are, well, we had a low, we've had a higher low, but we've also had a lower low. Prices have come into this range, and it has retraced quite a bit. The price action has not been overly bullish, as I expected a bull flag to play out quite a bit earlier than we are at the moment. But we do have a bullish candle which formed in the month of September. While we are currently bearish in October, the actual range of the candle is quite tight. So on the monthly time frame, it's difficult to say I could hold an overly bearish stance. So I would be slightly biased to the bullish side on the monthly time frame. So if I go down to the weekly time frame, see where we are. Again, this is a trend which I am not too enthusiastic about. We've had a sloping trend to the downside with a series of lower highs and but the market has not really trended in a particular direction. It has just been slow in its movements. So again, I suppose we can expect to see a few lower highs. We do appear to be putting a lower high at present from the weekly candle, which opened at on the 2nd of October. As long as we do remain, let's just get this right. As long as we do remain below those highs, we can still interpret this market on a weekly time frame as holding a bearish bias all the way down to the high to mid 108 level. So let's just have a look at the daily chart. Not my favorite time frame, and let's just see what's happened. Now we've seen prices. We've had this series of over here. We've had 114.30 being a double top, and where prices have reversed over the past couple of months in May and July. That's right. Let's just say that was in May. And yeah, May and July. Now we do appear to be putting in at present a lower high, which would be bearish. If we do hold this lower high, we'll be expecting prices to go down to possibly as low as 108.50. Of concern for holding a bearish stance, we do have the daily candle which formed yesterday on the 16th of October, and this candle which formed was a bullish candle off the 200 period moving average on the daily chart. Currently prices are contracted between the 20 period, the 20 period and the 200 period. If however we do use this, if we do see continuation from the daily candle, retests of the most recent highs at 1344 and 1356 will become likely to the upside. If however this was just an impulsive move by buyers to buy from 200 period moving average on the daily chart, then we can expect prices to continue downwards to retest the 1160, eventually 110.73, and even further away the high 108. So that should summarize my analysis for the US dollar Japanese yen. So before I go, LCS, like, comment, subscribe. Thanks for watching.